Hello folks, welcome back to Market Junkies. In this video we're going to be delivering an update on VMC. By the close you're going to be equipped with the knowledge on VEV over the past 5 months following our initial fundamental dive into the business. So let's get into it. So who are VMC? They're a Canadian EV provider who are expanding within the USA. They primarily deal with both trucks and buses, but equally have a legacy product with CNG fuel. Price movement to note, they did uplist to Nasdaq in June 30th of last year, currently actually 69% down for the year and valued at around 107 million US dollars. The ownership split is still quite interesting. There's little to no institutional ownership here. Although the insiders are clearly very bullish, they own over 10% themselves. And in the last 3 months, they purchased over 225,000 Canadian dollars in stock, according to TipRank's trader activity, and sold very, very little. In relation to analyst coverage, minimal still. Price targets have been set by two. We've got a price target of $25 by Spartan Capital and a price target of $11.92 by Catalyst Equity Research. And finally, public float, relatively small at 25 mil, with shares outstanding, again, just below that 35 million piece. So nothing really to be too afraid of there. So the industry as a whole, and this time it's a bit more targeted on that van and truck industry, but essentially North America is lagging behind massively when it comes to the EV marketplace. Registrations for half one of 2021 are as follows: USA 297,000 units, China 1.149 million units, and the EU 1.06 million units. The Canadian EV market has barely moved in the last few years in reference to its market share. It's remained steady at around 5.3%. What that does mean is that around 1 in 20 vehicles registered it has been an EV in the last year. It has grown quite considerably. So if you compare Canada for Q3 2021 to Q3 2020, there was actually an 18,000 increase in units, which represents a 67% increase of registrations. The three provinces that making up the majority of those are Quebec, Ontario, and British Columbia. And now I want to take a little look at the infrastructure bill, specifically the USA. So Biden actually wanted 45 billion for school buses. He received 7.5 billion for electric buses and 7.5 billion for expanding an EV charging infrastructure nationwide. So he's fallen massively short actually in relation to what he was asking for, which will have a slight knock-on effect for us. And between 2021 and 2026, the Canadian government wants to invest a total of $2.7 billion in the promotion of all electric buses, including that of schools and their charging infrastructure. That's going to be available to transit agencies, school boards starting this year. The Canadian government has said that it's going to support their commitment to subsidise the purchase of 5,000 zero-emission buses over the next 5 years. The programme is actually part of an 8-year programme and a $14.9 billion investment plan. I want to take a little look at the bus market in the States. It's very hard to find really specific figures for the Canadian marketplace, but in the US, the value of the market today is 419 million. Now that's expected to grow with an expected growth rate of 31.4% over the next 5 years to 1.9 billion by 2026 and 315 billion by 2030, which would register a growth rate of 34.71%. So it's certainly expecting to grow quite explosively over the next few years. But today, there are a mere 2,255 zero emission buses running in the United States. Now, that figure might be a little bit out of date. It's from back in November. But even so, I personally expected a lot more. And in relation to the market that VEV can go after, we also have the medium duty product, and there's 430,000 units of that across North America. And then we've also got the shuttles, and there's 260,000 of those across North America. So there is a real appetite for what we're attempting to achieve. And there's a gap to be penetrated. So market consolidation, and this is according to Mordor Intelligence, is that essentially there's sort of 5 or 6 players within the bus space that take up the majority of the market share. Now, they don't consider it saturated at all. However, there are a number of smaller EV players that are beginning to ramp up production and ramp up their sales and marketing. Now, VEV, of course, have a head start because we have that existing brand name, and actually we've built out a partnership model across North America. It's just about executing now and rapidly taking market share, of which to date, or in the last sort of 5 to 6 months, they've not really done within the state. So they do need to look at that. Okay, so the positioning right now, really, really strong product mix. The guidance for 2022 is really impressive, of a minimum of 140 million in revs. And they've even given a breakdown on what's going to drive that. They expect to complete over 95 Vicinity Classic bus deliveries, 75 Vicinity Lightning EV buses, over 200 VMC EV trucks, and over 300 Vicinity Optimal EVs. And that's going to drive those revenues forward. And in relation to the Optimal EV licensing deal, which by the way has turned out to be a phenomenal, phenomenal piece of business, they initially had access to 30 million in uh, confirmed revs for 20 million investment. Whether we've received 19 million of that existing 30 million to date. That was just a few weeks ago. However, there's said to be a backlog of over 600 million in the sales pipeline. Even if you just close 10 or 20% of that, makes that licensing deal very much worthwhile. Plus, you've got a further 9 years to run over with that. And that's to sell their S1 and their E1 product. But what's really interesting, and something I'm not sure that people saw, is that it is for the USA and it's also for European distribution. Now, this wasn't initially released in the PR. However, I've most recently today seen pieces of information that suggest or basically state that VMC also hold the distribution license into Europe for these two products, which is really exciting. But I'm also worried that it could have been a typo, because why would you not release that? It's pretty key information, and the EU are much further along in their journey when it comes to adoption. But anyway, we'll leave that there. We have the EAVX partnership, which is really exciting, newest business unit with JB Poindexter. These guys have done 2 billion in revs, with 95% of that actually dedicated to transport solutions. The idea behind this partnership is we're going to develop the next gen class 3 EV truck, and actually also deliver something else in the class 5 truck, which you can see to the right there. Now, Poindexter own a number of highly established combustion truck and van businesses. It's a really, really underrated alignment. They're going to have so many customers that we just drip feed. We're not even going to be selling this solution. These guys are. Crazy, crazy, crazy alignment. I kind of shocked actually that the guys have pulled this off, considering we're still sub 50 seats. It's pretty crazy. And then we had the class 3 traction, so that we've sold 100 trucks very recently, and that was, to the Pioneer Group. These guys have been appointed to act as VMC's exclusive dealer in the province of British Columbia, and this follows actually a previous letter of intent they sent a few months ago. So these guys have 17 locations throughout BC, and they're selling 6,000 vehicles a year. But what I love about this is the approach, the business approach, right? So if we copy and paste this out across Canada or across America, where we just have premium partners that will buy for I don't know, a larger amount of product at a slight discount and then sell it themselves, fantastic. We don't have the sales team to position this and push this throughout the States and Canada. And then we have our alignment with Proterra, really strengthen our supply chain there, having that multi-year agreement. But also we're developing, again, a product alongside those in that heavy duty transit bus. But what this agreement includes is battery supply for a minimum of 600 commercial electric vehicles through 2024. We've of course got the Vicinity lighting vehicle expected to begin rolling out in Q3 of 2022. But if we look at our cheapest product, right, which is the class 3, it's worth 100k. Let's just do 100k times 600. So at a minimum, you're looking at 16 million in revs for the next 3 years, spread across 3 years, which is pretty exciting stuff, right? There are also actually something worth noting that we had 20 truck delays for 2022, probably why Q3 numbers were so poor. Although I don't really want to give them that excuse. I just think they didn't have enough revenue or enough deals coming in, to be honest. And then finally, actually, on those updates, and this one's pretty cool, actually, we've had Brett Phillips come on board as the he was the vice president of sales at Commercial Bus Group at VEV. These guys have done 2 billion in revs in 2021, so pretty heavy hitter coming on for us. Hopefully, he's going to drive that North American expansion forward, and that's quite an exciting development. Okay, financially, 140 million plus guidance, which is very exciting. We've got revs, however, that are down by 67% for the quarter. And that's just 2.9 million for the 3 months ending September 30th, as compared to 8.9 million in the 3 months ending September 30th. Now, there were a few buses pushed back into 2022, and that was the reason given for the drop off here. Revenue did, however, grow 128% for the 9 months ending September 30th to 49.3 million. Gross losses totaled 0.7 million, or 24.9% of revenue in the third quarter, as compared to a gross profit of 600k, or 6.3% of revenue in the same quarter a year ago. Now, net loss is down, or up, I should say, to 4.8 million, as compared to a net loss of 1.3 million in the same quarter a year ago. Working capital is fairly similar, actually, to a similar period in 2020, sitting at around 16.4 million. We currently have 5 million on cash or cash equivalents. Please do correct me if I'm incorrect on this. And the reason I say that is actually going through their statements was much more difficult and confusing than I thought it would be, or that it's ever been previously. Lots of jargon, let's say, thrown in there to probably hide the fact that they haven't got a shitload of cash on hand. Okay, outlook and catalyst. Look, we've got Washington State factory coming online in Q3 of this year. 10k in capacity unlocking by America in the process. That's exciting. We've got product launches. Vicinity Bolt release, the heavy duty class 6 with EAVX. They're all in 2022 this year. That's going to be exciting. Equally, we've got further optimal EV sales and an EU possible expansion for Vicinity in Europe, which is really, really cool. They've adopted far better than North America, so it would be really exciting to see how they would get on within the EU market. That said, I think they need to focus on just North America. And again, this hasn't been confirmed directly from the business. It's just from a little bit of PR that I noticed with the EU piece on. And also, I'm looking forward to further regional partnerships. I think that exclusivity deal with Pioneer Group is just perfect. If they can look to copy and paste that model across Canada and America, it's going to really set them up real strong to have a real elevated sales unit. Equally, though, what isn't included is there is a possible supply bottleneck here. We'll have all seen it, the chip supplies, the chip issues, but also actually the EV battery materials also will be a concern moving forward. And of course, if we are affected, that's going to negatively impact our progress in the deliveries we can perform. And then finally, it's the class 3 continuation. It's been really, really successful to date. I didn't expect it to be this successful, but we are selling into a marketplace where 400,000 of these types of vehicles are sold annually across North America. And we seem to be very well positioned to harvest some good, strong market share there. To conclude, I think the company's in pretty good health. It is concerning that there's not really any institutional investors. Management, however, have rampantly been buying, so it somewhat mitigates that, or buy it for stability and to hold a good rise. I believe that institutions are required. Equally, one thing I've not mentioned is the dilution that took place. It was really poorly executed, actually, and I hope the management have learned their lesson on this. The USA is, of course, at the start of their EV adoption story, with only 297,000 registrations in half one, much lower than China and EU. And so the market opportunity here is absolutely enormous. We've got a ridiculously strong product mix with all products selling, but equally the astute partnerships in play, which I hope is saving them cash. Is one concern for me is the amount of cash they have. We can't see how some of the partnerships are set up, but I trust we aren't swallowing any costs on collaboration builds. I would imagine we push that onto the partner. If so, very, very positive. The optimal line is fantastic. 90 million revs today. Access to 600 million in the pipe is brilliant. Potential EU and USA distributor deal there. We've got EAVX is a really strong partner as well. Throw into that mix the Proterra battery deal for a minimum of 600 through to 2024. Washington State online for Q3. I don't actually believe there is an EV on the market that is as overlooked as this one. There is some low cash. I'm not greatly impressed with the poor payment terms that we have because it's always on delivery rather than on order value. However, we've started this year off to a flyer, 33 million in orders, and it's set to continue. The upside here is enormous. The downside from current SP, in my opinion, is completely minimal. And worst case scenario, JB take us out. They've taken out 40 businesses per year.